Welcome to the Explainer. We're diving into a problem that, let's be honest, drives people crazy all over the world. Why does my savings account pay me basically nothing? We're going to break down exactly why that's happening, and more importantly, we'll explore what you, as someone living abroad, can actually do about it. This isn't just about finding a new bank. Nope. This is about understanding the whole system and finding your own way to actually grow your money.
All right, so here's our roadmap. First, we'll diagnose the problem with your savings account, why it feels so broken. Then we're going to pop the hood on the banking system itself to see why. After that, it's all about solutions. We'll start with a totally risk-free way to practice, then talk about how to tap into global markets, and even look at a new digital option out there. The whole point? To build up your financial know-how step by step.
So let's kick things off with a feeling that is just universal. It doesn't matter if you're in Tokyo, Berlin, or Buenos Aires. It's that sinking feeling you get when you're doing everything right. You're saving your money, but you still feel like you're falling behind. We're about to show you why that feeling, well, it's not just in your head. It is a very real thing.
This quote from the Wall Street Journal, it just nails it, doesn't it? It perfectly captures that feeling of frustration. You work hard, you put money aside, and you check your statement. And what do you see? Almost nothing. But this isn't just about feelings. It's about cold, hard math.
Okay, get a look at this number, 0.42%, less than half of 1%. Let me put that in perspective for you. If you have $10,000 saved up, after an entire year, you'd make a whopping $42. It's so small it's almost comical. That isn't a plan for building wealth. It's a parking lot for your money.
And here's the knockout punch. You take that tiny interest rate, and you put it up against a recent inflation number like 3.6%. Suddenly, the picture becomes crystal clear. Your money isn't just standing still, it's losing value. Every single day. The cost of everything, gas, food, you name it, is going up way faster than your savings. So in this kind of world, saving in a bank means you are, literally, getting poor.
So why? Why are these rates so pathetic? I promise you, it's not an accident. The entire banking system is designed to work this way, and the answer is hiding in plain sight, in their basic business model.
This is the whole game right here. Borrow short, lend long. Think about it. Your savings account is you giving the bank a short-term loan. You can ask for it back anytime. So they borrow it from you for a super low price. That's your tiny interest rate. Then they immediately turn around and lend that same money out long-term, like for a 30-year mortgage, at a much, much higher interest rate. That gap between what they pay you and what they charge somebody else, that's their profit.
And here's exactly how the machine works. Step 1. You put your money in the bank. For them, that's a liability on their books. They owe it back to you. Step 2. They pay you that tiny bit of interest. That's an expense, and of course, they want to keep their expenses as low as possible. Step 3. They take your money and create an asset for themselves, a loan that makes them a ton of money in interest. Your cash isn't sitting in a vault. It's the fuel for their profit engine, and you're just getting the fumes.
Okay, we get it. The system's not built for us. So let's talk about what we can actually do. But hold on, we're not just going to dive into the deep end here. The very first step on this new path is all about learning and practicing. And the best part? It is 100% risk-free. Now, this might be the most important piece of advice in this entire explainer. You do not have to risk your hard-earned money to start learning. Think about it. You can learn the rules of the game, test out ideas, and build your confidence, all from the safety of the sidelines. It is, without a doubt, the smartest way to begin this journey.
Let's be super clear about the difference here. A paper account is like a flight simulator. They give you a bunch of fake money, say 100 grand, and let you trade in the real markets. You can buy, you can sell, you can see what happens without risking a single penny. A live account? That's you in the cockpit of a real plane. It's your money on the line. The rewards are real, but so are the risks. My advice? Don't even think about the live account until you're comfortable in the simulator.
And the great news is, this is so easy to do. You can go to a website like cboe.com, that's the Chicago Board of Options Exchange, look for their tools section, and sign up for a virtual account. All you need is a name and an email, and it doesn't matter where you are in the world. Watching from Germany, Singapore, Japan, Australia, doesn't matter. You can open one of these US dollar paper accounts today and start practicing. So, you've spent some time in the simulator, you've learned the lingo, you feel good about your strategy, you might be ready for the next big step. Opening a live brokerage account and actually accessing the global markets for real.
Now, if you're going to go live, you've got to do your homework. A couple of key things to look out for. First, you'll probably need a minimum deposit, often around $2,000. Second, a lot of big U.S. brokers are more than happy to have international clients. They want that global capital. They'll even handle converting your currency for you. Third, you'll pick a platform you like. But listen, the most important thing on this list, and I can't say this loudly enough, is taxes. This is not something to guess on. You have to talk to a tax pro in your home country to know the rules before you do anything.
When you start looking at the different platforms out there, please don't get intimidated. It's like getting into a rental car. You know, there's a steering wheel, a gas pedal, and a brake. The main stuff, buying and selling, it's the same everywhere. Sure, the button for the windshield wipers might be in a weird spot, but you'll figure it out. Just find one that feels right for you.
Okay, so we've talked about the traditional markets. Now let's pivot and talk about something totally different. A newer financial tool that people all over the world are starting to use. It's a digital thing called a stablecoin. But, and this is a big but, it's really important to understand that it comes with its own unique benefits and some very serious risks.
So what on earth is a stablecoin? Well, it's a type of crypto that tries its hardest not to be volatile. Its whole job is to be boring. The most famous one is called Tether, or USDT. And the idea is that one USDT is always supposed to be worth exactly $1 US. It's trying to be a stable digital dollar you can send anywhere over the internet.
And that brings us to the big, flashing question you have to ask yourself about this technology. Is it a genuinely useful tool? A safe place to hide from a crazy local currency or an old, slow banking system? Or is it a house of cards with huge hidden risks? Well, the honest answer is, it's probably a little bit of both.
Now, this slide really gets to the heart of the whole debate. On one side, you've got the stuff it's really useful for. It's a place to park your money between crypto trades, or a way to send money overseas way faster and cheaper than a bank. But on the other side, oh boy, the risks are serious. What's actually backing Tether? The company has been incredibly secretive about that. It's controlled by a private company and, get this, they say right on their website they don't guarantee you can actually trade your Tether back for real dollars. That is a massive red flag.
And this right here is the global dilemma in a nutshell. I mean, if you live in Turkey and your currency is collapsing, is it riskier to hold a digital dollar with a shady background or the lira? If you're in Paraguay and need to send money to family, is the lack of transparency worth it for the speed and low cost? People are using these things because they solve real-world problems, but it's a huge trade-off. You get convenience, but you have to put your trust in a system that, frankly, hasn't earned it yet.
Okay, let's pull all these threads together. Understanding the problem with the bank, practicing in a safe space, exploring these new tools, these aren't just random tips. They're all part of building a totally new and powerful mindset for your financial future.
Look, the real goal here isn't just to find some magic product that solves everything. It's about a fundamental shift in how you think. It's about realizing that in this day and age, you have to be the CEO of your own money. The whole point of this is to empower yourself with knowledge so you can make smart, competent decisions no matter what comes next.
And I want to leave you with this final thought because it might be the most important one of all. When you start out on that paper trading account, you are going to make mistakes. You will have trades that lose money. It's guaranteed. Winners see those losses as tuition. It's the price you pay for an education. Every loss inspires them to learn something new to get better. Losing with fake money is the best, cheapest education you will ever get. It's what transforms you from a novice into a smarter investor. So the real question isn't whether you'll make mistakes. It's what are you going to let those mistakes make of you?